Good morning, everyone, and welcome to the European crossover webinar and last day of the week. And we have seen the euro continue to go on and rebound further. Let's go and push this in here. If you caught the daily roundup, we're pushing out, talking about the trend line, and we're looking for 1216 right there. Obviously, it's moved over a little bit, but we're looking for 1216. So there's a little level right there. You can see here 1220, that right here. So we'll see where we put the resistance today, but we've got this trend line and right there here 1220. We've got the downtrend line here coming back. So one of the things that we talked about is if you look at the structure of the market, for the same reason we said, hey, this thing can break, and you can see quite the defense of the daily. But look here, one of the things that we talked about was going into yesterday and in today is if we got a daily close below 1130, that would open the door for 110 and with a pause at 1080. But and we even had our bias chart support here for 1124. We took out the 1124. I think we might have got as low as 1108. But the key thing was that, boy, did we defend that 1130. And one of the things that we focused in on the daily roundup was, look how weak this thing had been. Lower. I mean, it could not get an upside blip to save its life. And finally, we came back with a vengeance here and defending that 1130. So we said, hey, look, you have to factor in longer term. I think the euro would go lower, but it's pretty oversold. So you have to give it an opportunity to go, a little bit higher in here. Hence, we point out this downtrend line, which at the time came in at 1216. We do have this 1220 here that they can get to, so we'll probably use that one as a resistance. But that downtrend is still pushing higher, so maybe one more last push up in here. That 1204 area here is a 61% to kind of pull back a bit from there. Dollar yen continues to remain weaker here. And cable just trying to find a little bit of a bottom here. And dollar cat had, after trying once again for what we've deemed as the elusive 135.04, we just have not been able to do it. We talked about on the wrap yesterday how this thing has poked its head above the foxhole so many times, but every time it pokes its head above the foxhole, it gets shot right back down. And here we are, maybe not off a lot, but still, off close to 50 pips from making that challenge once again up here to 135. The Euro Aussie was making some highs, or not brand new highs, but was back up there challenging. As the Aussie was getting tested a bit on the weak side, now it's trying to push back up. So we're opening up a little bit low here. I know people are short on here, and it was going to be interesting to see how this week plays out. They're going to try and push the stops lower, especially if the euro strengthens. The Aussie's trying to show a little bit more strength. It was earlier in Asia, and then it quickly gave it up, and then here we are trying to reassert ourselves. And we shall see. And if the S&Ps do break down, it'll be interesting to see here with the Aussie yen, because we were even looking for lower here on Aussie yen. Now, the S&Ps are trading at 28.36, so a very nice rebound off those lows. That may keep this from testing lower. We're looking for potentially a break, a decent break here. I think we're looking for 74, 74.73. So we shall see. So we're going to get into the news, and we'll go from there. The morning bid, last days for May, signal new Brexit phase. Let me just get some hot tea. I'm feeling much better, but this morning I was really coughing up like crazy, so my throat's a little bit sore. So feeling much better. I'm on my way back, but yeah. Anyway, last days for May signal new Brexit phrase. Time could finally be called on British Prime Minister Theresa May's crisis-ridden partnership later today, after she meets the head of the so-called 1922 committee running her Conservative Party. She will likely go down with more of a whimper than a bang. However, as the expectation is that she will merely announce a date for the departure, but stay on as caretaker PM in the interim. An arrangement that one of the committee described tactfully as a tidier than an immediate ousting. This will then trigger the contest that will bring new leader to power, whose main task will be to get Brexit done. Even hard Brexiteers will argue if that means going without a deal. The narrative that the European Parliament elections ending on Sunday could yield an unqualified victory for far-right Eurosceptic populists has received a jolt with the surprise win of the left-leaning Labour Party in the Netherlands, which voted yesterday. Moving on to the markets. If anyone still had any doubts that the trade tensions are impacting the outlook for world growth, well, then yesterday, flash PM releases in advance economy should have been an end to them. The most striking was the U.S. manufacturing, where growth stumbled to a near decade low, and U.S. service PMIs, which had been held up by the stronger labor markets, also weakened. Japanese manufacturing snapped back into contraction, and new export orders fell sharply, while Germany was dreadful too. All that ravaged Wall Street and global oil prices yesterday and sent U.S. yields tumbling to 18-month lows, around 2.29 as bets on Fed rate cuts accelerated. World stocks are set for a third week of declines. U.S. shares are down more than 1% this week, and U.S. yields have fallen to around 10 basis points this week. Well, like I said, right now, S&Ps are 235.6, really close to right on their highs, but we do have some resistance right in this area. We shall see. But this morning, the mood is brighter, seizing on Trump's offer to possibly make China's blacklisted Hawaii, which he dubbed a very dangerous part of a trade pact with Beijing. The other positive was Japanese data showed a tick up in key inflation group 3-year highs. All in all, the latest news follows as some of the buying of yesterday's losses have helped shares claw back. One downside risk is U.S. suggestion that the anti-subsidy duties should be levied on products from countries that undervalue their currencies against the dollar. That could also see higher tariffs on Chinese products. On the currency front, flight to safety yesterday saw the dollar at 2-year highs versus the G10, and the yen strengthened 0.5%. Again, it's calmed down a bit, with the dollar easing 15 tenths and the yen flat and the euro 2 tenths higher. The sterling is likely to be center stage if the PMA announces, as expected, a timetable for her departure. Probably after Trump's state visit to the UK starting June the 3rd. Well, that's pretty key. So it's likely to be center stage later in the day if PMA announces, as is expected, a timetable for departure, probably after Trump's state visit to the UK starting June 3rd. We talked about that. We mentioned that as a date yesterday in the New York wrap. Well, I remember we saw, well, actually, that was from yesterday's news, morning news, too. So that makes sense about that June 3rd. The currency started Friday 25 tenths firmer versus the dollar, and only the second day in the blackout of the past 15 sessions. Let's go on and move on. Australian dollar tumbles. I want to hit this since the Aussie's making its move. Aussie dollar fell and bond yields slipped to all-time lows on Friday after Westpac predicted rates will be cut 3 times this year, more than markets view for 2 easings. Going against the tide, Westpac banking chief economist Bill Evans, who carries tremendous credibility in the forex markets for getting these calls right, sees policy easings in June, August, and November. Wow. Interest rate futures are almost fully priced in one cut. The RBA June 4th meeting following guidance from Philip Lowe earlier this week. Remember, he mentioned that the Aussie had that big move on the surprise election results, and then we ended up giving it back because then he announced, that they would take that into consideration. Our forecast for employment, wage growth, economic growth, inflation conditions in the housing market are consistent with the need for policy to ease through the full course of 2019, not to going on to hold as early as August. We see the unemployment rate drifting up to 5.4% by year end. Housing market, Australia's jobless rate has climbed to 5.2. I'm not going to spend too much time on this one. I'm going to move on to FX. My throat's really hurting. Dollar retreats from 2-year high overnight. The dollar was on track on Friday, plus a small weekly loss after coming off 2-year lows. Another factor keeping the greenback down was rising expectations the Fed will cut interest rates later this year. Trump said on U.S. complaints about Hawaii technologies might be resolved within a time frame. And Trump administration expects to put a fair amount on the Fed now on investors thinking about a rate cutting scenario. Okay, let's go and move on. So already talked about the euro, and what we're looking here on the upside. We covered it, as I mentioned, in the New York wrap or the daily roundup, whatever they want to call it. I think we kind of bandied about the names, but I guess the daily roundup is probably the best thing. But we talked about this downtrend line and the structure of the market because it had been so weak, and then to come back with roaring defense of 1130 opens the door for them to push a little bit higher for those who may have stepped in a little bit early shorting or hung on too long. How much pressure they'll see? Well, the 1204 made some sense here at the 61%, but we really think that looking at this downtrend here, okay, which we had 1216, and we've got this level here at 1220. So we'll go with the 1220. And support. All right, there, 1160. 1160. That might be a little bit close. We'll call it 1165. 1165 for support. Right there. 1165. Let's take a look what we didn't get a chance to see here. We do have retail sales at the bottom of the hour. UK retail sales, durable goods in the States, Mexican GDP at 9 a.m. Eastern. Remember, I'm in Central, so throw on another hour. So durable goods today in the U.S. 8:30 Eastern. Mexican GDP at 9 a.m. Eastern. UK retail sales at the bottom of the hour. Let's go to cable now. Just a second. Okay. So we're very close here that we've got that 25.90, the 78%, and 25.98 here. We even gave it a little bit of extra room yesterday if they want to clean out the stops. Let's just move it to the 78% if they take one dip there. So we'll just go with 25.90 here. We can already see that May will be leaving, so probably dips are going to be defended there, or shorts may, if they're still short, want to go in and step in and cover some of them. So we'll look for support there. On the upside, we said 26.95, and the high so far has been 26.89. Let's take a look at the 2 hour. Okay. If we get a little bit of push because maybe there's rumors it might come sooner, which I don't think so, before Trump comes, I don't think she wants to announce it, or they'll have her announce anything. So that makes sense right after June the 3rd. But we'll, in case things were to get a little giddy up, we'll put 27.30. Let's go move on to the Aussie dollar. Well, now we know, the Aussie was, making a little run up here, and then Westpac was saying they're looking for 3 rate cuts this year. So that took a dip. Now we kind of held that area. Here's, you can see right there. And we're going to go with, we'll go with 68.81 right there. It actually was a low, but you can see these touches coming across here. Let's go 68.81. On the upside, yeah, this is interesting. Well, we did get it. We've seen a recovery in the S&Ps, so that's helped. We could have been dragged much lower. And I think the market's like kind of sitting like, okay, let's see what's happening. we've made it up to 28.35, and there's some good resistance there, or some resistance there at 28.35-ish. You know what? If they can squeak a little bit higher, then they might push some stops. So, well, they do have that rate cut thing coming. So, I mean, with June meeting, might be a bit of a short leash. We'll just put it right here with 69.26. I don't want to give it too much room. I don't think it's going to go too far. So let's go with 69.26. That 69.06 has held it, but I mean, we'll give it a little bit extra room. If the S&Ps hold up okay, so. It's held the 64.96 area here. Actual low right there, 64. 93. Drag that just a little bit lower to match that body touch right there. Resistance. If they stretch them a little bit, 65, 75. Oh, that's too much. I just don't see that today. We'll just give it just a little bit. If they were to squeeze, the S&Ps were to come back a little bit. Let's just go. I'm not even going to push up that high. Let's just say 65, 61. We're looking for that break. But unless everything goes to heck in a handbasket right now, we did get that move yesterday. That might even allow it to continue to lower. But the S&Ps are kind of holding unless we get some really bad news and it knocks things down. I mean, that'd be the only thing. See, I don't necessarily see that right now happening. So the market may keep itself steady ahead of the Memorial Day holiday. Yeah, let's go move into the dollar CAD. Well, it continues to remain this 35.04. And that's still a ways away right here if you think 50 pips. But if they're going to try, the dollar's going to make a move, it'd be about this 35.04. I'm surprised we weren't able to take this out, considering, you know, the shape the crude's been. But it's going to be it, 35.04, which we should still have already have. Yep. Support on the downside. We'll go with 34.33 if the dollar takes that dip, which we already have there. Let's go to the dollar peso. Boy, this thing's really been weak. I think Steve gave the best advice. I was asking about this a couple of days ago on the wrap. I was like, what's your take on this? And he's like, well, it's just something. It says something like it wouldn't even bother to trade it because there's nothing there definitively, and that makes the most sense. I mean, we broke above the trend line, and even when we had risk aversion, still nothing was happening, and that was even with the dollar pushing hard. And I'm just saying here, so really poor showing. On it. Oh, we're still holding above it, but nothing's really happening. And so it's really, I guess, it is dead money for right now. I think we had here before the 18,927. We had 929. Well, just move it one little bit lower like that. It didn't really make that much difference, but that's what we're looking at. Resistance 1911.7. Yeah, I want to keep that. Actually, move it up. I'll leave it even a little bit higher. It's 1915, but 1911. Yeah, right there. And they weren't able to take that out, so that's still keeping in check. We're in a range market. We'll go to dollar yen. This one really broke apart here. The dollar yen. And it continues to remain weak. At the beginning of the week, we were looking for this to go on in. Well, heck, there it is right there. We were looking for a move initially, which was going to be a move to 1062, but before that, a move to 1031, a pause, and then up to 62-ish. I thought we might even be able to make it up in here. But obviously with the S&Ps being so weak, they were already weakening before it really broke. I'm talking about the S&Ps. So I was thinking, man, I don't know how I see, but do you think it will make one more run? Because I'm thinking, it looks like technically could make one more run, but I'm thinking to myself, it's going to have a hard time with the S&P so weak. Well, eventually, then we came in yesterday saying, hey, well, these S&Ps can maybe break. And that's what we said. We were looking at 1046. I go, it may not even make it at 1046 because this thing looks pretty weak. And sure enough, we rolled over. And I tell you what, we rolled over more than I would have even thought. We had a buy chart support here. It was 984.93. I probably would have thought, well, of course, the S&Ps did come under a lot of pressure. But I would have probably thought like we're at 972. And look, they dipped. They had a pretty good little dip here. So resistance now, and it's really holding like a rock too. I'm saying sticking down here. 991, and that's really on the upside because you can make the case right here, which was our support, 982 being resistance. Yeah, I think we're going to go with the 982 because despite what the S&Ps are doing, the dollar is not even reacting. So what was support yesterday is going to be resistance. See that? Now it's going to be resistance. Support. On a short-term basis, go with 936. Let's go with the cash dollar. Well, I'll tell you what, this cash dollar index is a head scratcher. But yes and no. And let me give you my take on this. You know, it was so key because yesterday, when we had closed above, just at the week, we not only closed above, we reclaimed the 97.89. Now we've given it back. But if you're looking at yesterday, we had our bias chart resistance at 98.33, and the high was 36. So it just happened to be, like I said, where I was going across it. It ended up holding it well, but I really just was using it as a resistance. It wasn't thinking, oh, this is going to see a pretty good pullback. I just thought we'd get a good little yank. But one of the things we can kind of focus on, let me see here. Yeah, you see right here? This is what I think knocked it here. And it's a two-part thing. So it says, sorry about that. The most striking was U.S. manufacturing, where growth stumbled to a near decade low. So it's a two-part thing. Not only was the data weak, but now this leads to the idea that they're going to cut interest rates, and eventually, like maybe in the fall or whatever like that. That weakened the dollar, and that took the sail out of the wind, took the wind out of the sails. Henceforth, we saw the dollar yen continue to weaken and weaken pretty good, but good. So that is what's really weighed here on the dollar, is because now this whole rate cut thing, you got to price that in. Whether it's going to happen anytime soon or eventually happens, but that's a pretty big deal there when you focus U.S. manufacturing growth symbol to a near decade low. So that's saying, okay, that's not just regular service. It's manufacturing. If the thinking might be, it's really giving an insight as to things that maybe, further down the road, we're going to see more weakening than what we think. And obviously this China thing isn't going anywhere. So maybe the Fed will end up cutting in the fall. And that's what's kind of kicked the dollar, back down. So I think this 97.89 is important. I don't think it's as important as it was this last week or the prior weeks when it lost it and then when it regained it. Now I think, unless the dollar comes off, and I think it can come off a little bit further because of that, because I'm having to price in the potential for a rate cut. I don't think the wheels are going to come off the caboose, but it can come in a little bit lower. So here's some support coming in around 53. Let's look at the 2-hour chart. But that's the thinking. I thought that was important to point that out because I think it was important when it caught the 97.89. I don't think it's the end all because it's losing it. From a technical standpoint, in a way, yes. But I don't think it suggests that we're going to come apart. But they do have to price in. I think that when they get back a little bit, I don't think the wheels are going to come off the caboose. But losing that 97.89 will weigh a little bit, so they'll push a little bit further downside. And also, if you have to price in because that manufacturing was so weak, then once again, you got to price it in. The dollar has to go lower. So let's take a look where we stand here then, where it can possibly go to. Well, I think we had our resistance support was 97.78. So we actually made down here to 68. That's been a number we had before, but let's take a look here. For me, some people trade just straight up technicals, and it's good to trade that way. To me, I like to have, for lack of a better word right now, like a story that goes along with it. So it kind of helps me if I can, they say the strongest moves are when you can match fundamentals with technicals. Well, it's not so much fundamentals, but in a sense, we're talking about why, it came off and it came off pretty doggone good. We had 33 and look, the high was, well, it says 37. Um, and I expected a pullback. I expect this kind of pullback, but I expected, a bit of a pullback. But with that, that's capturing. It's not only just because it's decade low, but it reinvigorates that story that the Fed's going to in the fall will cut in rates. And the idea that things aren't going well with China, well, that's just going to lay that. And you're already starting to see, hey, if it's already weakening now, how much weaker are things going to be in the fall? So that's going to gather momentum, more momentum. So where can they fall to? Well, I was looking at the 53 on the daily, and 54 is the 61% on the way back. We'll say just right there. I'll show you. Right there. Oh, 52. We can still push a little bit further down to 45. That's 30 ticks. Yeah, let's go with the 45. I don't know if that it's going to hit it today, but they'll probably want to make a stab down there. So we'll go with the 45. 54 is a 61%. So you'll see a little bit of covering there, but we can stretch down here to 45. So it's not an exact science, but we'll see here. Upside. We'll go with 97, 93 for the upside. Now we'll move into the cross rates. This move continues to move up in here. Remember on this New Zealand CAD, maybe switching this New Zealand yen out to, but look here, that was a nice little follow through. It continues to move a little bit higher. But let's go move back into QEN. This market is just dead money right now. And there's no movement in this market for the most part. I mean, look, after 6 hours, we've moved, what, 20 pips? And look, it's not anything new. I mean, finally you break low. So we may be just getting rid of this one. Every now and then it gets a big move, but it's a continuous move, continuous, not even the type of trading that we do. At least here, when we focus on very short-term trading, we may eventually make it down here towards the 78%. So we'll probably go and switch this one out, to be honest with you. There's no movement in here to start with. But for now, we had 70.98. Well, that's if we do see a pretty good drop off. We're not seeing it so far unless things start to really come apart. So we're just going to tighten it up and go with 71.29. And I think we're going to switch that out over the weekend. Resistance is going to be right there at 71.72. Let's go to the euro yen. We're trying to hold these lows in here. We'll stay with this 22.22 and the high. Is going to be right there, 23.08. Let's take a look at what we're on the 2 hour. $23.08. We're still trying to hang on here on this euro odd. This may not see any fruition. Well, I'll tell you what. Once again, though, it's going to keep that bid with the idea that the RBA could cut rates in June. So it'll be interesting to see if they try and have like a, I want to say a blow off top, but we'll see. In the meantime, if the idea with the yen strengthens, it's going to be 62.42. And support, it's holding up rather well right now. You can go 61.79. I'll call it 61.78. And then on the Euro Kiwi, support's going to still remain the same here, 71.09. We had 7107. The only difference here is resistance will be 71. 69. $71.69. Aussie yen. There's still opportunity for this to break lower. Um, we talked about 74, 73, and we'll stay with that. And the upside, 75.95. No changes. And on the guppy, it's going to be 39. Well, things are still pretty tight right now. So for now, 39.53. And 38.21, we'll keep that there. And starting odd. That will remain the same, 83.24, 84.59. Okay, and here's the bias chart. As I said with the euro, if you saw the daily wrap, we were referencing here this trend line here, and which at the time puts in at 12.16, and we're going to go with 12.20. Um, it'll be interesting to see what they do if they want to make one last push in here. We do have durable goods. If that comes in weak, maybe we can make one more push in here towards this 12.20. That confidence with this trend line. And we shall see how the dollar index. Dollar index is trying to make a little bit of a push in here. 81. We do have the resistance at 93. Be interesting to see if they could reclaim 89 on a day on the weekly close. They may try for that. But I think we may have to correct a little bit further here, only because I think the market's going to start to price in because of that, and we've already referenced that. If you're late coming into the show. The most striking was the U.S. manufacturer of gross stumbled to a near decade low. And that really opens the door now that the market has to price in the potential, whether one thinks it or not, that the Fed could do a cut in the fall because things are with China aren't getting any better, and we're already starting to see now the groundwork being laid where, hey, look, decade lows, okay, and things are going to get worse. So, you're talking about China, and then we start to see further slowdown. Then, yeah, maybe we have to do that, and then we do have to factor in a potential rate cut, and that's what the market's doing here. And why I think the dollar index is not able to go further at this point. But that's all we have for today. I'll get the bias chart posted, and there won't be I'll see y'all on Tuesday. It's a holiday here in the States. It's Memorial Day. So European crossover will be back in place on Tuesday. And thanks for joining us here.